Every year we do a couple of fireside chats. Last year we were fortunate enough to have, now it's Treasury Secretary Bessent, future Secretary of War, Josh Wolfe needs no real introduction to this crowd. He is the founder of Lux Capital. He was a Forbes 30 under 30 at one point.
That's usually now terrible because it almost always presages somebody that's like committed fraud. That's actually
so he is a venture capitalist. So that is the point I was going to make is that Josh and I have known each other for a very, very long time. I greet him in the green room saying, "You went gray. What happened?" So the future is now, to bring back one of our other panels. But this is about the Singularity is Nigh. So you've been up here and you and I have been talking on camera since literally 2016. In 2016, for those who didn't pay attention, Josh flagged NVIDIA in one of these discussions. So just keep your notepad handy.
$15 billion market cap at the time, and I think I presented at an Invest for Kids conference in Chicago when Intel was $150 billion. I said this is going to be the pair trade of a century, and it was premised on the idea that everybody at the time believed that NVIDIA was just tightly coupled to the console gaming cycle of PS5 and Xbox every 2 years. And the big insight was that no, this was going to become the soul of the new machine for simulation and AI. And I have a similar insight. I don't know if it's going to be as big as NVIDIA, but we'll get to that.
All right. Well, this is now everybody is definitely leaning forward in their seats, like the guy from GameStop saga. But when you were here last time, we talked about some of the innovations that were occurring that you were starting to see in the healthcare area, and those have exploded, right? I mean, in a record change, we've now actually started to see obesity fall in the United States. We have seen, just in the past week, I believe that there was the first successful treatment of Hodgkin's disease. We have COVID vaccines. That's a joke. What's going on? What's happening? Where are you seeing innovation in that area? Is it meeting your expectations? Are there things that are right on the cusp that we're missing?
It is meeting expectations. We are in a market sense, a biotech winner. So you had a massive overfunding, say some 2020, 2021. Some of that was driven by the rise of vaccine providers and the enthusiasm around that. That has abated. You have thousands of small biotech companies that are going to go bust. I mean, literally, they are, in many cases, prosecuting 5, 6, 7 programs. If you're the board now, you're saying, look, you have to pick one and either divest, mothball, or sell or get rid of the others. And so there's going to be a contraction. You know, you've seen, I think, 19,000 layoffs just in August in the pharma industry. Obviously, that's talent that doesn't lose their know-how, and so they're going to be repurposed over time. But you will see the cyclicality on that just generally. So that's from a market perspective. I would say it is a good time over the next year or two to invest in new, young biotech that ends up having war chest balance sheets, but you're going to just have a lot of volatility over the next 2 years. In the private market, a lot of down rounds, a lot of resets, recapitalizations, all of that. Are you guys getting a little bit of an echo?
I'm picking up an echo on Josh's mic as well. Are you guys getting?
Maybe that's a little bit better? Yes? Okay, I think that's better. So within the technological space, when you talk to most of the people that are in pharma or biotech, and particularly the scientists and principal investigators that are working on breakthroughs, none of them actually care about anything that's happening in the markets. I mean, obviously they want to know that they have cash on their balance sheet, but they couldn't tell you what the 10-year rate is. They probably couldn't even tell you that Scott is the Treasury Secretary. I mean, they don't follow that, right? They're focused on their competitive pursuit of scientific excellence and coming up with a breakthrough and competing with their peers. So we talked before, and I think it was a year or two ago, about GLP-1s and GPUs that were probably the two most important things. And obviously that in obesity and metabolic disease has been true. I now say that we've talked about Gen X, Gen Y, and Gen Z, but there's a new gen, which is Gen D or degeneration, and you have muscle and bone and neuro. And these are demographic trends, in part because people are skinny fat from taking GLP-1, so they're not working out. You can't force people necessarily to, cut calories and diet. It's just easier now. You take a shot. But we're going to have a lot of people that have muscle loss, and some of the GLP-1 providers are trying to find combination therapies that they might be able to pair with this to be able to maintain muscle. But that's one big theme, is muscle generation. Bone is a really interesting one, and there's a crazy new company that hasn't even come out of stealth yet that we funded out of UCSF. An amazing woman, Holly Ingraham. Her husband happened to win the Nobel Prize for figuring out.
Happened.
Yeah. Well, he's not involved in the particular company. It's just, as a spouse, just a very interesting power couple. He figured out the sensors for our sense of touch and temperature sensing and won the Nobel Prize for that. What was crazy about what she was working on is most mice are male mice, just as a byproduct of breeding mice. And she happened to work as a female researcher on female mice. And she discovered that there was something interesting, that when the female mice were pregnant or lactating, they were actually producing more bone. And it turns out when we're in our mom's womb, we are actually stealing bone, calcium, from their body. There's a cell called an osteoclast that breaks it down. There's an osteoplast that builds it up. It's sometimes why women have these cravings of dairy and ice cream and all that kind of stuff, to, body sending a signal, hey, I need calcium. She figured out the neural circuit that triggers bone production. So it's going to be a really big deal. It's super early, but the ability to dial up or dial down for people that are in osteoporosis, people that are on cancer drugs that are losing bone density, and then even being able to do localized fracture repair. So that's pretty cool, all because she happened to find this circuit by working on female mice, which the industry wasn't really doing. So that's the second degeneration.
Well, I just have to pause you because the classic phrase is technology is indistinguishable from magic when sufficiently advanced, right? What was the Harry Potter solution for a broken bone, right?
Yeah,
they laid in bed. No, they had to take a potion. They laid in bed for a day, and their bone regrew. So it is
similar. I always say that the gap between science fiction and science fact is always closing. Yeah. And I'm going to steal that from you, Mike, because
can we get audio to check on Josh's?
Yeah, or I can even. Is this better? Maybe.
Possibly. Not really. Is something on your connection? But go ahead.
Sounds good. All right. I'll just hold it. And I keep this archive of sci-fi things that we've actually funded, from drone racing to robotic surgery, and all these things come out of Star Wars and Star Trek, and it's pretty cool. But I'm going to add yours. That's a great Harry Potter reference. The third is neurodegeneration, obviously with an aging demographic, and that really is the next frontier of lots of drugs. Many have failed, most have failed in Alzheimer's and Parkinson's, but that is an area where a lot of smart people and a lot of money are going. There will of course be failures, but all you need is one GLP-like breakthrough for that. And memory and cognition, and I think that's probably the most moral thing that medicine can fund. The other notable thing in biotech, of course, is that going back to the female mice, I think 3 or 4% of all R&D in pharma actually goes to women's issues. For men, hair loss, erections, everything like we need is generally taken care of, but a lot of women's health is underfunded.
I have no idea what you're talking about.
so that is that is another big opportunity. Yeah.
Wow. One of the immediate thoughts that comes to mind when you talk about this is, you and I both share very similar religious outlooks, et cetera.
Which is that we generally don't have.
We don't have one. But I think we both actually, part of what you're saying just reminds me how much you and I both also come from basically the pure science standpoint, which lends us to this view that the human body and what we understand of it is much more machine-like than we'd like to think. We're talking about ways of manipulating the machine, changing the machine, improving the machine, which is really what technology is all about, right? At the same time, you just brought up a really interesting point, which is the most moral thing that medicine can do. And I had lunch yesterday with your wife, that fully disclosed, by the way, to be clear.
What?
Yeah, exactly. And, one of the things she brought up is you have had experiences in the past couple of months, years, that have actually changed some of your perspective on social issues. You and I are seeing friends that we've known for a long time, guys like Niall Ferguson, et cetera. Peter Thiel is now giving speeches about the Antichrist. There's been an extraordinary moral flourishing, or at least an awareness of the moral dimension. I'm going to push you unexpectedly to expand on that observation.
Yeah, and before we go there, just very quickly, I do believe deeply that we are biological machines. There's nothing, I believe, supernatural about the way that we work. Even understanding things that to us are actually illusions, like free will or consciousness, have causative basis in physics and chemistry and biology that we just may not understand. We posit, these sort of abstract things. By the way, anytime that anybody's talking about like quantum consciousness, I think it's utter bullshit. But people will figure that out. But we are machines. In fact, one of the recent books that Lauren and I got in a big argument about, my wife, Lauren runs an activist hedge fund called Impactive Capital. She's far smarter. She does all the publics. I do the privates. I hope that she never shorts my companies when they go public, but otherwise we're good. Was a book called Determined by Robert Sapolsky, who's a primatologist and a neuroscientist. And I was very persuaded within the first 2 chapters that we do not have free will. And she feels very strongly that we have agency and that the choices we make and so forth. But it's a great book on not life being deterministic, but just why we do the things we do that are causatively explained to the last second, the last year, and all the way to the genetic predispositions we have at birth. Religion. I was raised Jewish in Coney Island, Brooklyn. I appreciate, by the way, everything that you do and everybody does here for Coney Island Prep. It's profoundly important. I was bar mitzvahed in Israel, and then I came back and basically took the money and ran, and I've been atheist since. We were married. We had some sort of ceremonial things for the grandparents. I have 3 kids. My oldest wanted to be bat mitzvahed, and I wasn't sure cynically if it was for the party or the money, but she was actually into it, and so we joined Central Synagogue and have sort of been part of that. But even then, I would have this sort of irreverent take on it. It wasn't October 7th in Israel that radicalized me. It was October 8th in America. And seeing the information operations that were pre-planned and the protest signs and these things and the weaponization, the perversion of words like genocide and apartheid and colonizer. I mean, this to me was the other front. There was the kinetic front in war, but there was the information front. And that was something that really radicalized me to the point that my mom and my in-laws got a call from Lauren saying, hey, you finally got the good Jewish boy you always wanted. So yeah, that's my journey. Is I still do not believe in supernatural things or a God per se, but this tribal identity is something that in the past 2 years has been pretty profound. And I do think we are at war with ideologies that are anti-West. And I think the best proponents of this actually are the very moderate Muslims, particularly in the Middle East, and you see some of the people in UAE and the United Arab Emirates in particular that view the Islamists on the sort of far end and sort of on the far left now in this red-green alliance as one of the great threats to their sovereignty and nation states, and I see it in a very troubling way.
Well, I mean, I have described it in similar fashion. So again, I'm, an atheist. I don't believe, but at the end of the day, I emphasize for people the importance of the community components to it, right? And so there is something very profound about an institution that asks people to come together in communion with their friends and neighbors. It's something that's very needed to bring people together. You also, I think, just identified something that's incredibly important. You talked about the Red-Green Alliance. I recently wrote on my Substack about effectively the idea that it is not a spectrum, it is actually bent by the weights at the end, and so those two find themselves in much closer proximity than they do to the integrated center.
It was the same thing, by the way, in 1979 in Tehran with the Iranian Revolution. It was the far left that were basically used as useful idiots, and then many of them were literally killed. And so I think this is a dangerous force, and it's a force where I do view not quite as a George Bush like axis of evil or good and bad, but there are people that basically want peace and coexistence and prosperity and a sense of community, and I feel that from Hindus, evangelicals, moderate Muslims, Jews, and there even within Jews you have conservative and religious and atheist, but I do think that there's those that want coexistence and peace and prosperity and tolerance, and there are basically those that are intolerant. And the intolerant, if you look around the world at most of our geopolitical conflicts, it comes from the highly intolerant, religious sects.
Yeah, I think we are at a fascinating time, and I think it's interesting to watch many of the arguments that were used by individuals like Christopher Hitchens, for example, to pitch atheism, something I never really subscribed to his arguments, but they were basically some variant of, religion and the intolerance around it is always at the center of all the violence and the murders and the deaths and the wars. Unfortunately, what we're finding is that if we are not given formal religion, we create religion.
Yes.
Right? A belief that if I don't act now, it will all come down.
Totally.
Right?
And then you get this Popperian paradox of being intolerant of the intolerant.
Yep.
And it's a complicated world, but
it is a complicated world. Speaking of things that you just brought up, though, that I want to make sure that we.
And can I just say actually one thing? I am convinced, because I'm sure we'll get into AI. There will be an AI religion.
Oh, I totally agree with you.
And there will be people that are witty and cynical about it, and they will exploit. But you can already see this, where people, two of the biggest uses for AI are conversational chatbots, therapy, and sort of companionship. And I think that there are going to be moments where there's a political class or there's a company that takes away or changes this, and people are going to be like, no, you're taking away my
friend, my God.
And for most of humanity, some people might believe that they communicate with God, but you're actually receiving, empirically observable communications with this ethereal entity that you're communicating with that's giving you amazing advice and complimenting you. And so I think that there are going to be sects that form in new religions that are sort of almost a techno-religious view on AI, and there will be leaders of this movement. And like many leaders of religious movements, they will exploit people and make a lot of money.
Well, I mean, not to circle it back to what you were discussing earlier, but there's a book very famously called The God Gene, right?
Yes.
That identifies that there is actually a
Propensity.
genetic marker that gives a propensity to believe in these. I hadn't actually candidly thought about the imagery of I am sending messages into the ether and I'm suddenly receiving them back. You combine that with that propensity and that radically, you are correct. I can't imagine a scenario in which that doesn't fully emerge. But you mentioned briefly Coney Island Prep, and Karen Johnson spoke with us earlier. We were able to hear some of the amazing statistics. One of the things you and I both do on a regular basis is we invert, right? So we hear a statistic and then we reverse it. And I just want everyone to understand the importance of that 5 times graduation rate for those who go to college. So first of all, craziest statistic for a New York public high school for 100% of the kids to be accepted into college. 92% matriculation out of the high school graduating class, and then as Karen pointed out, 5 times the graduation rate that you would expect on a demographically adjusted basis. Coney Island Prep has about 75% of their students on lunch support. This is an incredibly impoverished community. It is disproportionately Black and Hispanic, 40% Black, 34%, 36% Hispanic.
And by the way, that means somebody that qualifies for free or reduced lunch is a nice euphemism for basically say family of 4 that makes less than $30,000.
Right, in New York City. But to put that in perspective, that 5 times on a demographically adjusted basis using AI to derive these numbers in the brief period that we had, so I didn't need any of the analysts or anything else, it's about 15%. I checked that with Karen. The last year, it was actually 84% of the class that had graduated 4 years ago, graduated college, right? Invert that for a second and understand that the primary issue with our student loan debt crisis is actually kids who go to college and then don't graduate and are trapped with non-dischargeable debt and no degree. And think about how you've changed that fraction with a program like Coney Island Prep. And so the money that is actually being donated today falls into the category of funds that they refer to as college support. When I send my kids off to college, and I'm sure everybody else feels this as well, they have access to our resources and funds. And so when my daughter casually forgets that Uber isn't actually free and it shows up as $500 worth of Uber rides over the course of a month, that's a discussion that we can take care of. But for a young kid coming from a poor family, they see all their friends doing this, they quickly get in over their heads, they find themselves in financial conditions in which they can't resolve themselves or extricate themselves. These are helpful funds that are used much more for things like tuition, textbooks and other stuff that might not be covered. But the simple reality is that you're giving resources that allow those statistics to continue to grow and allow the unproductive student debt to be avoided. So please give generously, understand how important this is, and just how incredible those statistics actually are.
It's a very, very profound point and super appreciated. A related point, which was probably the second biggest debate that Lauren and I had, one being free will, which is a more
By the way, does everybody want to be in Lauren and Josh's house at this point for dinner?
When she does these activist campaigns and people sort of might give her some pushback or whatever, I just want to talk to them. I want to be like, you're going to lose. I can tell you from firsthand experience. Like, I don't win these arguments. You're not going to win. So save the money, save the time. Just do what she's suggesting. It's for your own good. The other major debate we had actually relates to this, which is it started around dancers in New York City. And she's a patron of the arts. She was on the board of Joyce, David Parsons' dance company. And it's super cool. I was not into dance, and we went to see this thing, which was very scientifically cool, where he has a dancer that is choreographed with a strobe light. And as the strobe goes, this dancer is jumping, and all you see is this person floating in midair, which I was like, oh, that is super cool. And suddenly I was like into dance because it was like technological and scientific. And she's like, these people make no money. They collect like welfare or like unemployment for half the year. And I said, well, this is a simple market thing. There's just too many dancers and not enough demand. And we got into this argument then about colleges and what the rate of borrowing should be for somebody that is going into a particular program. And she thought it was immoral that if somebody, say, graduating from Coney Island Prep was going into marketing, that you would have a higher rate for a career pursuit like that than if they went into computer science or aeronautics or aerospace. And my argument was that the market already sets a price. And the average marketing person maybe is making $60,000 or something like that. Whereas today, if you're going into AI, forget about the Zuckerberg Pochapalooza where you're getting $100 million offers, but you're making $1 million as a base salary as a young person in your 20s. and that is a non-subprime credit. So I think that there should be a market mechanism that adjusts the cost of capital and borrowing based on the price signals from recent earnings for jobs that would help to increase the supply or lower the supply and discourage and encourage people to go where the money is. And it's still an unresolved debate.
Well, if you want to invite me over, I'll take your side. But no, I mean, this is actually one of the most interesting things to me about the way people interpret capitalism in a lot of these discussions. You and I immediately gravitate to price as a mechanism of information exchange,
yes.
Right? It's not a moral issue. There are moral issues in the construction of the framework, but these are all the things that we ultimately need to think about. For me, the more information I can get in price, the better off I am. You unfortunately missed the tokenization panel before this, and so maybe this is actually a good segue, but one of the points that I would emphasize about instantaneous settlement, dramatically improved transparency of information, et cetera, is that I get a lot more price data, right? That actually is super, super exciting to me. I try to always emphasize one of the wonderful things about capitalism is I don't have to come up with a solution, I just have to pay the person who does, right? What are you seeing as a solutions provider in tokenization, digital assets? Is this an area that you're doing any work in?
Most of what we've done have been on the sort of infrastructure of it. So like Anchorage, which is a custodian for the assets. We happen to own some coins which were entirely like a speculative thing, and I couldn't tell you what an intrinsic value of this is other than a derivative.
Why do you have to own some coins?
We don't have to.
Oh, you don't have to?
No, we just some of the partners said we should own some Ethereum and Bitcoin and stacks, and we had a small portion of the fund that we said, okay, this will scratch your itch so that you can minimize the permanence of regret if these things take off. But it was purely speculative, intersubjective belief that somebody else would believe that. I can't make a justification for the underlying entities. But I do agree that bypassing the settlement, the clearing, all the bureaucracy, that this is sort of a new way for people to just basically say we're going to reset the system and do things in a way that's more logical and rational. Settling trades for us as venture capitalists when you are coming out of lockup and getting the securities, and these should not take 3 days, and there shouldn't be gamesmanship in this. It should just be instantaneous.
Yeah.
So.
Okay, so on the infrastructure side, basically the picks and shovels component. What else is interesting?
Everything.
Everything. Okay. Tell us what's going on.
Anybody that's super smart, technical is we follow where human capital is going and what they're interested in. About a third of what we do is biotech and healthcare, which we touched on. The big trend that I think we've talked about in the past that I feel is inevitable, and I always talk about directional arrows of progress. We've spotted this when it was energy. You went from carbohydrates to hydrocarbons to uranium, so I got excited about nuclear, and then we said the biggest unsolved problem with nuclear is what do you do with the waste, and we started a company and got lucky when Fukushima happened and became the only US company for that cleanup. We had the same thing in compute infrastructure and the way that we interact with our computers. We went from large mainframes where you physically stood up and pulled plugs like an ENIAC computer, and then I called it the half-life of technology intimacy, so that was 50 years ago. First half-life 25 years ago, you have a desktop computer with either a tower or horizontal machine with a monitor, and you flip the switch on, you got a mouse under your palm, you got a keyboard. Next half-life, 12 and a half years, a laptop. Now it's physically touching your thighs. The mouse gives way to a trackpad. You still have the keyboard, but it's getting physically closer to you, not in a perverted way, but just observably so. And then 6 years ago, dominant form is your iPhone. First thing you touch in the morning, last thing you touch at night, 18 hours a day. Then your Apple Watch, your AirPods. So compute was conforming to you. That led us to then fund a company called Control Labs, which was using non-invasive brain-machine interface. It was reading the 14,000 nerves that innervate the roughly 15 muscles that let you type at 100 words a minute, turn a dial on a thermostat, touch a keypad on an ATM. And the founder of that, a guy Reardon, who actually invented Internet Explorer when he was at Microsoft, worked with Bill Gates for 10 years, and then went and finally got a degree from college at 33 and a PhD in neuroscience, said, why do we need these control surfaces? Can't you just gesture in free space and basically go like this to control Spotify and raise the volume, and sort of like Sorcerer's Apprentice? And so that was another directional arrow of progress. Meta bought that, and the demo that Zuck just gave with the glasses and the band, the neural band, is that company. They bought it for a little under $1 billion, maybe 2 years after we funded it. Zero revenue, but sort of indicative of like the kinds of crazy stuff that we fund. I feel the same way, that same directional arrow of progress on the inevitability of automated science, where you will have, just like AWS, Amazon Web Services went from on-prem to co-located to cloud in the use of technology for most corporates. AWS turned that from a CapEx decision into an OpEx decision that people could effectively rent like electricity, or use as a utility. And I think that the same thing is going to happen with science. Today, if you're a biotech company, if you're a pharma lab, if you're an academic lab, you build the infrastructure, you have your centrifuges, a lot of that stuff is underutilized capacity. You are starting to see cloud labs, and those cloud labs are accessible from the internet. Scientists can be on the beach in the Bahamas, dial up an experiment as though they were using Pro Tools or Logic or GarageBand to write a song, but instead of doing virtual instruments, like a guitar and drum and vocals, they're doing centrifuge, pipetting, et cetera. Longitudinal, temporal sequence, do this, then this, then this. And the crazy thing is, the results then come off. On the one hand, you have solved the reproducibility crisis because you have high precision robots that are basically running these experiments. You do need to introduce stochasticity and randomness into this, because we know from the history of science and discovery that most of the great discoveries were followed by that's interesting, mistakes. And so you need some sort of random happy accidents. But then you will have the results come back to you, and there will be a full published paper using AI that comes and says, hey, here's the results. And by the way, there's a paper from 1976 and a paper from 1994. These might be spurious correlations, but do you want to rerun the experiment and change these variables? And you just click yes, and then you go to sleep, and it runs the experiments. That's inevitability. I don't know who the companies are, I don't know who the technologists are, but that's a directional line of progress that I feel like in biotech and healthcare is going to be a very big deal. So that's one area. Second area, as it relates to AI, I would say that there's a 5-year psychological bias. Everybody wants to be invested today where they should have been 5 years ago. So the place to be in the past 5, 6, 7 years was in audio, video, images, maybe the foundation models, maybe in open source. We have a company called Hugging Face, which is the largest repository of open source models. You have OpenAI and Anthropic and Grok on the closed side. You had NVIDIA on the chip side. You have the data centers, of which I have a very contrarian take. Two-dimensional AI is over, meaning voice, video, images, text, in that it's so saturated. We as consumers continue to benefit from it, but the prices as investors to invest in many of these companies, I think, is insane. And your incremental expected return on them are going to be very low, if not negative. Three-dimensional AI, if you want to call it that, is very interesting. And this is robots and biology, in part because there is no training data. There's no repository of all the tweets and all the Reddit information in the Library of Congress archives and books and Google and things that you can scan and fight with people over copyrights, whether you used it inappropriately or not. A robot that's walking in now into the stage, if it was a humanoid robot, which I'm also skeptical on, or rolling, would have to have a world model to understand how much force to use with a glass that's half full and less force when I've drank and another eighth of it or whatever. We do that intuitively. Robots don't do that. And that therefore means that the training data to train robots for very complex, unstructured environments that they've never been in is going to be really valuable. So I'm bullish on that. The supply chain for robots, 60 to 70% of the BOM of the bill of materials of the cost are motors and actuators, and most of that comes from China. Mm-hmm. We need to reshore, friendshore that in the US for a lot of security reasons. You've got the rare earth minerals that go into the magnets go into the motors are relatively specialized and custom. Somebody's going to figure out how to do them on a standardized basis, both for robots and drones and the rotors and drones. So that's another big area. The big insight in AI that I'll share is that I am convinced that 50% of the inference that we do, this is the punchline, will be on device. And that means that you will not need anywhere near the compute infrastructure that Jensen and NVIDIA would like you to believe. So even though I was super bullish on NVIDIA going back to 2016, today he would like you to believe that you need hundreds of thousands of H100 clusters for training and for inference. You do need it for training, but the models, particularly even open source models today, are getting so good that the real value is in the repository of data that somebody might have longitudinally. Bloomberg with their financial data, a pharma company with their published and unpublished scientific results, Facebook, Meta with all of your Instagram likes, and Elon with all of your tweets. Those are going to be increasingly valuable, but the models themselves, I think, for inference will not need that, because I believe that 50% of your inference will be on device, which means instead of going to the cloud for a query, of which you will still do for search, maybe instead of going to Google or Gemini, you're going to Perplexity or Claude or OpenAI, but 50% of your inference will be on device. And there was a paper that Apple published maybe 15 months ago that said we can do large language models on device using flash memory. And it rhymed with that same feeling I had when people believed that GPUs were just for gaming, and suddenly they got repurposed for these multi-math problems that became our transformers and GPT. And I feel the same way about SK Hynix and Micron and Samsung and some of the emerging edge inference players, that are going to be doing on-device inference. So that's another big trend.
So just very quickly, I just want to orient people to that because this immediately gravitates to another component. When you build a large data center, right, that is a single large CapEx, you then have to debate whether you're going to depreciate it over 12 years or 3 years or 2 years or whatever the right answer is. Replacing that is a continuous process, but it tends to be extraordinarily lumpy in its construction. Part of what you're describing with on-device component is actually taking the upgrade cycle and putting it out to 4 billion people who each are going to be upgrading, and therefore it's a continuously upgrading system as well. Far less CapEx, far less.
And it will undermine many theses that people have. One is the extraordinary spend. And, the news earlier this week of the $100 billion NVIDIA investment, over time into OpenAI, and OpenAI's commitment that they're talking about $1 trillion, of CapEx over time between, Mideast and US. I don't feel like that's just going to end well. And if you look at the history of every major CapEx technology cycle, in the late 90s, early 2000s, it was fiber optic cables and Global Crossing. That was sort of the poster child of that. Of course, the distressed guys did well, but the third world got connected to the internet, essentially for free as the largesse and greed of investors that believed that internet bandwidth was doubling every month, which proved not to be true, necessitated all this build out of fiber optics. You saw it with the on-prem colo data center players, back before the cloud stuff happened. So I think that if you look at people like Anthropic, they spent $100 million to get the first Claude model, and then they generated about $100 million of revenue over the ensuing 2 years. Then they spent like $1 billion, and then will generate $1 billion. At some point, the expenditure will exceed the revenue that hits an asymptote, and then I think people are like, holy shit, like this is, done. And you'll start to see it probably with some of the semi-cap equipment players first that, are seeing orders decline, and then maybe some of the, I don't think it's shenanigans yet, but what Jensen is doing now is very reminiscent of the telecom guys in the past, where we're going to do vendor financing and invest in you. You're going to buy our chips, so we're going to boost our revenue. And at some point, the TAM just is like, okay, we've hit it.
Well, it's both the TAM and also the margins associated with it, right? One of the reasons you're extending vendor financing is it's just another way of making your product, quote unquote, cheaper without actually lowering your price, right? Fascinating. So your conclusion would ultimately be that the DRAM and NAND flash guys
and SK bought Intel's NAND business for, I forget if it was $2 billion or $8 billion, but they have the dominant market share. In that ecosystem of that triumvirate of SK, Micron, and Samsung. Samsung feels like the Intel, bureaucratic. SK is a little bit more nimble. Being Korean, they will more easily, not necessarily easy, but more easily navigate any restrictions that we put in the US on China sales. Micron is going to be beholden a little bit more to whatever the administration decides. But then there'll be new entrants that come and probably a flood of capital that goes into these edge inference chips.
Okay, so I interrupted your arrow of progress.
Yeah, so that's, the arrow of progress was on the one hand on biotech and seeing robots and AI do science. And by the way, the companies and the countries that capture that, I think will be on this progress curve, and I can't predict if it's for military munitions or material science or new drugs, but being able to reduce our ignorance, increase knowledge, by 24/7 science being done by machines with hypotheses generated by AIs, I think is something that people would have thought 20 years ago is unimaginable. In the same way they, computers aren't creative, they can't do these, but now we see that of course they are. So conjuring hypotheses, I think, is going to be the next wave, and a lot of smart people are starting to go into like AI and science. So that's a big trend. Aerospace and defense is probably the biggest at the moment. We're spending a lot of time here. We were founding investors in Anduril and Saildrone and Hadrian and Varda and Impulse Space and sort of next-gen primes. Peter Thiel and I, 2019, were at Reagan National Defense Forum. We did a panel together talking about defense tech. You had all the big primes. You had Palmer Luckey, who was the founder of Anduril. I don't know if people know Palmer, but typically in a big Hawaiian shirt, cargo pants and flip-flops, very irreverent. You have four-star generals and secretaries of defense there, and everybody sort of making fun of him. And it was the classic Gandhi transition of first they laugh at you, then they fight you, then they join you, then you win. My guess is like 5% of the audience either applied to work at or now work at Anduril. Anduril is 7 years old, $2.5 billion of top-line revenue. There was $2.5 billion round that just got done. We originally invested them, I think, a $60 million pre-money valuation 7 years ago. $2.5 billion round at $28 billion pre. 30 billion post.
Still doesn't beat your NVIDIA trade.
No, but 16 billion of demand for that. So this will be a public company, I think, in the next 2 years, trading at multiples that are not based on cost plus contractors like Lockheed and Raytheon and Boeing. but more tech margins. And there's a long tail of companies. Many of them will fail in aerospace and defense, but you're seeing this thrust of the ecosystem. We have now funded 10 companies in the US that are hardcore just kinetic companies. And it used to be, by the way, even starting back with Alex Carp, who was a friend, he would say, look, we just make the product. We don't decide who just uses it. And now I think he's more overt about it. But Anduril makes weapon systems, and that's very uncomfortable for a lot of limited partners to say, it's not in our investment committee, or it's not in our value system. That's starting to change. You're seeing defense part of like ESG definitions. Mm-hmm. Even if you look at what happened with Russia, Ukraine, the idea that we would have had nuclear deterrence or better technology to deter Russia, the food crisis, the humanitarian crisis, the deaths, all of that could have been avoided in some cases. So I think there's a moral case for technologies as defense, but in many cases, as we're seeing even with the renaming of the Department of Defense, Department of War, which I will not run, is indicative of that. Air, land, sea, subsea, space, cyber, it's all like smart people are going and doing that. We've also invested in the UK in a defense company called Cambridge Aerospace. We've done 2 kinetic defense companies in Israel in the past year, 1 in Japan, and then we did a satellite NATO-related in Bulgaria. So that's a very active area with a lot of smart people and a lot of capital going in. And interestingly, I think it was Scott Besson years ago, who, when he was the CIO at Rockefeller, it dawned on me that there's going to be a bubble in aerospace and defense eventually. And obviously, bubbles are helpful to us because when we invest early and there's excess demand, we get to sell it at rational prices. Why is there going to be a bubble in aerospace and defense? Because some of the allocators can't invest in a defense company, and they can't invest in a fund that's exclusively defense, but they can invest in a fund of funds that invest in venture capitalists, that invest in. So it dawned on me that there's going to be capital formation and pools of capital that form to do this, that give people a little bit of moral distance from the ultimate thing, so that their investment committee say yes, and there will be excess capital chasing, a handful of really good companies, and demand. Palantir's valuation today to me seems unjustifiable, but I think it's also representative of a paucity of new defense tech companies that are publicly traded that people can invest in. So,
December 2019, I came into your offices, met with you, and they said you got to get somebody on SPACs.
Yes.
Right. What's happening right now in 401ks, the move to introduce private assets, is that democratizing or is that fleecing?
Maybe it's a little bit of both.
Yeah.
You talk to most of the giant private equity guys, and they have effectively tapped the sovereigns, the state pension plans, and they're all going to the retail channels and the wealth management channels. And so I think that there's going to be huge aggregated demand amongst those channels, and you saw sort of this from people that worked at a big wirehouse, big bank, and then these sort of independent RIAs, and so I do think that on the one hand, it's a good thing for people to be able to access and participate in what is increasingly private market activity, but on the other hand, you're going to have a ton of people that are just investing in shitty funds and shitty companies, and are going to lose a lot of money in illiquid things. So.
Are there tools in place to help people navigate that?
Not really.
Yeah.
Because you're going to see promotions of companies, and we saw it maybe in the past 5 years with SPVs, and there's all kinds of like inside jokes in the high tech venture world that people in the know. That in some cases, I even had an LP call me to say that they were on a call, they were invited to participate in an SPV. And the purported CFO of one of these prominent private tech companies was on the call, and he knew the person. He's like, that's not his voice. So the amount of fraud that's happening in that space, as people try to get into SpaceX and other things, they might be putting money into SPVs, but there's no exposure to the underlying, and it's probably Ponzi schemes of people, selling on secondary markets. There's a lot of secondary market activity, I think it's probably directionally a positive thing, but with that, there's just going to be fraud, excess, lots of losses. The venture industry itself, over the next few years, my prediction is you have these 2 dynamics of what I call the minnows and the megas. The minnows are the small funds, of which they proliferated. There were several thousand venture funds. We're $5.5 billion. We're relatively small. There's a handful of firms that are like 80 billion, 100 billion. But there are funds that are like 500 million. And they raised like a $100 million fund or a $50 million fund. And it was the thing du jour in the past decade to back a micro VC or a solo GP, meaning just one partner, not really a partnership. And maybe those people had access because their roommate or their best friend or their best man was at Meta early and they spun out and they've got some access to deals, or somebody was at Pinterest or somebody was at Snapchat and they started doing deals and getting access. And at a time when the cost of capital was low and valuations were high, every round was an up round and their paper marks look great. Maybe they had some liquidity and so they do it again. That has ended. And so the minnows, I believe, and I said this to one of my large LPs a few months ago, I said, I think you're going to have a 50% involuntary exit rate. And he looked at me and said, this is ridiculous, Josh. It's not going to be 50%. It's going to be 90%. So you're going to have a mass extinction of these small VCs because they're undercapitalized, have inadequate reserves to continue to fund their companies. They're not benefiting from lots of players pricing up their deals. If you're in AI and aerospace, maybe, but writ large, there's a massive contraction. At the other end of the spectrum, not the minnows, not the small fish, but the big ones. It started with SoftBank and Tiger, 8 years ago. They were benighting companies. Everybody was becoming a unicorn. They were effectively indexing. And then they sort of became undesirable capital. It was an adverse signal. If you're taking money from them, it's like...
You haven't made it through real VC.
Yeah. Whereas Sequoia, Lux, Founders Fund, they're much higher signal, more scrutinizing, et cetera. And so there was a higher signal. I do think, interestingly, after the GFC, after the Great Financial Crisis, you had from 2009 to 2014, Apollo, Blackstone, Carlyle, TPG, KKR all went public. And I believe that you'll have at least 5 venture firms that are becoming alt asset managers, approaching 80 to 100 billion AUM. I think it will be, and they're all good guys, and we like doing deals with them, and we like the role and the segment they play in the ecosystem of being a source of later stage capital for many of our companies. You will see Andreessen Horowitz, General Catalyst, General Atlantic, maybe Lightspeed, maybe Insight, all go public. And the choices that they're making strategically, buying up some foreign VCs, tucking them onto their brand, expanding internationally, advertising at Heathrow Airport, advertising on American Airlines, going to the retail audience, you can see that they're starting to build the groundwork to do an IPO. And that'll be great for the founders of the firm, any owners of the firm. I think the LP base will change to a less sophisticated, less institutional base, and I think that the founders will probably reject them in the same way that they do SoftBank today.
So, one of the things that we talked about, one of the reasons we discussed SPACs was the lack of liquidity that exists within the private space. Part of what the 401k solution would provide is a source of liquidity. I think it's probably a little smaller than people ultimately think it is, but there's lots of questions around it. But one of the securities, I'm actually going to be talking to David Einhorn after you, that he and I have discussed and that you and I have discussed are companies like Robinhood, right? And one of the most interesting things about what you're saying to me is I can actually see those IPOs. I'm generally not a fan of the idea that you're going to get exit liquidity. I could very easily see those play out in the mantra that's currently driving IPOs, or the most successful IPOs, which is you sell it to a generation that cares, right? Robinhood becomes your underwriter because they actually have distribution. People forget that the real source of competitive advantage for firms like Goldman Sachs or Merrill Lynch in particular was their retail broker distribution capability to place the IPO when it ultimately occurred. Now, by and large, those avenues are increasingly closed because people who would be in that category would have been somewhat cynically exposed to the IPO boom in 1999. Today, there's a new generation of investors that are coming through. Is this consistent with what you're seeing? Is
Totally.
that what you're thinking about it? Yeah.
Totally, and in fact, you had a whole group of dedicated investors. Some of the sophisticated short sellers would look at these guys, for negative signal, but like Putnam, Amarindo, which I think ended up with fraud and in prison. But
you know the story with me and Amarindo, right?
No.
February 2000, I gave a presentation to our largest
Alberto
client
Villarreal or what?
So our largest client, he was on the board, and he literally stood up and said, "This man is the dumbest man alive."
To you?
To me.
And he ended up in prison.
He ended up in prison 2 years.
Don't call Mike Green dumb. You'll end up in jail. But there were new issue buyers, right? There were dedicated pools. Now, you could argue that like Cathie Wood and ARC and some of that craziness.
Definitely think that's true, but yeah.
But I worry about that with all the meme stocks and the retail people. I think it is a source of capital that people will be tapping into, but I think, the vast majority of people will consider it dumb money.
One of the things that, when I give my presentation on passive and I share the results on that, there's a chart that I have that I usually focus on the idea that active managers have declined from 80% of market volume to 10%. There's another piece of that pie, though, that's actually quite interesting, which is in 1995, retail traders, speculator traders were only 10% of the market. Today, they're 17. And there's two important components of that. One is that they've grown in size, and now they're 170% of the size of the entire active manager space. So they're far more impactful in setting market behavior than people like myself.
I'll give you one other area that to me is intriguing, and it's very unsexy, which is why it's most interesting.
That's why you're discussing it with me.
And it's maintenance.
Yep.
Now, somebody will come up with a cooler theme, like they call it, aerospace and defense is defense tech, and environmental stuff was clean tech or whatever. Somebody will come up with something better than maintenance tech. But the insight is, if the cost of capital is rising, and I believe it is, regardless of what the 10-year is, Scott would like it to be below 4, markets may have different opinions. If you accept this premise that I gave you on the minnows and the megas, there will be less capital in our world generally, so the cost of capital for venture is rising. But if you are a capital allocation committee, if you're a CFO, if you're an activist investor, and you're looking at some of the spending of the big tech, and not just on like the CapEx, for data centers, but some of their other projects, like what Google does, and some of these, far out fanciful ideas, I think that you're going to see a shift from growth part of CapEx, which has been for the past 10 years, with people laying out military material, satellites, HVAC systems, new buildings, rail, transit, airplanes, cars, et cetera. And they start to shift to the maintenance part of CapEx, which is unsexy. But if the cost of capital is rising, you would look and say, how do we take these assets that we've spent a lot of money on over the past 10 years and depreciate them for longer? And so I think that there will be new demand for new technologies that help you to maintain older assets, older, as in like decade-old assets, for longer. And that's everything from early preventative maintenance, surveillance, detection. There are companies that are doing small acoustic signals to listen to the vibrations of industrial machines to be able to very early detect an aberrant sound to say this machine needs maintenance. And if you can detect that earlier, just like with a person, you can diagnose and fix it before it's down and cost you, a bottleneck inside your production plant. So that's an area that's, to me, very interesting, and it's a little bit speculative because I believe in a world where the cost of capital and venture is rising, and many people are looking at capital allocation saying enough growth, enough CapEx on this, let's maintain stuff longer. I think it'll usher in a new set of entrepreneurs focused on that. Robotic repair, other sort of interesting technological approaches to maintaining assets for longer.
Yeah, so this is actually super interesting. So this is one of the areas where you and I intersect and sometimes diverge on this stuff, right? What you're actually describing is the cost of equity, not the cost of capital.
Yes.
Right? And so...
Yeah, most of our companies can't support that because they have no cash flows.
Right. And so if you actually think about what you're describing, a world that requires less capital infrastructure in many ways is basically putting less and deploying less out, and at the same time introducing labor-saving devices, productivity-enhancing devices, because the cost of sensors have fallen so far.
Yes.
That's actually a deflationary world
Yes.
in which the cost of capital is likely lower, but you are correctly pointing out, certainly in your space, if the supply of capital tightens up, that's basically a widening of the credits of the equity debt spread, right? And so that makes perfect sense to me, what you're describing. But I actually think you're wrong on the interest rate. I think the likely path of the risk-free rate is actually significantly lower because of the deflationary components. Okay, fascinating. So we managed to get that far before we actually encountered meaningful disagreement on something. I'm not even sure it's that meaningful. But, all right, if there's one message that you kind of wanted to put out in our last kind of 10 minutes that we have on stage here, what would be the areas that you see as particularly important? Like, I spend a lot of time talking about kids and how we've misoriented our society around taking care of old people as compared to taking care of kids. What would you focus on? I know that's one for you as well. But
well, look, I think Coney Island Prep to me represents one of those, which is the education of people who lost the sort of Rawlsian lottery, the ovarian lottery, people that were just born into circumstances not of their choosing. Everybody knows the sort of John Rawls thought experiment. Which is a beautiful...
Nobody else knows it, but yes, I know what you're talking about.
It's a beautiful thought experiment. I think I first heard it from Buffett or Munger, but the premise is, congratulations, you're going to be born tomorrow, and you get to decide the rules of the world that you want to live in. You get to decide if there's a social safety net, if healthcare is free market or provided by the government, if we live in a capitalistic society, a socialist society, if there are ramps to be able to get into buildings, if those are mandated, like the ADA. And the only catch is you're going to be born tomorrow into this world, and you design the rules for the system. You just don't know which lottery ball you're going to pick of the 8 billion. Are you going to be born black or white, male or female, able-bodied or not? And given the statistical odds that, I don't know, 1.5 billion in India, 1.4 billion in China, out of 8 billion people, that 3/8 chance, 37.5%, that you're going to be, born in one of those countries, or maybe Bangladesh instead of Brooklyn, or, how would you design the systems? And I think that that's a useful thought experiment to think about fairness in society. So I grew up in Coney Island, a single mom. I was white, not black. She was a school teacher, had very high expectations. But I think that there's a lot of people that are born into really shitty circumstances, and they have, brilliant aptitude, but just don't have any nepotism, any knowledge, any connections. And so I think that's a virtue just in sort of a moral sense to be able to support. More practically, one of the questions that I get a lot is like, what are you teaching your kids, being on the forefront of technology? And my answer will surprise you, because I want them using every AI. There are, restrictions at school about what they can and can't use. I'll give you one example, which is my now 15-year-old who's in 10th grade, when she was in 8th grade, which my 13-year-old is in now. She had to do a study on evolution. And so she had to come up with an environment and a variable, and the environment was Candyland. And the variable was candy that was raining down, and the animals in Candyland could eat it. Some had hard teeth, some had soft teeth. The soft teeth ones died, sort of like elephants as they age when they can't eat anymore. And the hard ones could eat candy and they flourished. And so you got selection. She drew this thing out over the course of 3 or 4 days. And it was beautiful and it was sophisticated. Now, fast forward 2 years, my 13-year-old in 8th grade doing the same project uses one of our companies, Runway ML, which does AI-generated video. And she designs this forest ecosystem with blue trees and green and blue bugs, and the blue bugs are camouflaged inside the blue tree, and the whole thing just like unfurls. And she spent 30 seconds on it, and it's way more sophisticated. She understands the principle just the same, but I don't think that it's important that my older daughter had to draw this thing out versus the other one was able to express it using technology. So I want them using every form of AI and being versed in it like a language, like you would learn Mandarin or Spanish. And which, by the way, when I was growing up, again, in Coney Island, Brooklyn, single mom, school teacher, she would say, you have to learn Japanese and golf, because that's the lingua franca of business in the world. I didn't do either. Golf, to me, socioeconomically, does not comport with my worldview. I like basketball and skateboarding and surfing. And then the latest generation was you need to learn Mandarin and coding. And I would argue that, between one of our companies that's in coding, Cognition, or others like Cursor, these things are irrelevant, and or less relevant. But I want them knowing all of the AI tools. The one thing that we really emphasize, though, and I always think about this in terms of abundance and scarcity, along with like a directional arrow of progress, is even if you think about healthcare, like AI can take all my blood results and give me really sophisticated differential diagnosis, that my doctors can. But I still want my doctor to put his hand on my shoulder and be like, don't worry about this, you're fine, and we'll introduce you to this person if you have this issue or whatever. And so the care part of healthcare is really valuable. The psychological human intimacy of being able to connect with people, salespeople are still going to really matter. Blue-collar workers are going to thrive, and it's actually white-collar workers that are sort of screwed in the next few years. And you're already seeing it, and I'm sure you've done the parsing to know how much of this is actually from AI and productivity and how much of it is, capital-related. But young graduates that normally would go into banking and consulting are seeing this like drop-off. And you talk to many of the CEOs, and they're like, yeah, we're cutting 30% of our labor, and we're not hiring. So I would actually emphasize in this ever-increasing AI technological world the human aspect of being able to look somebody in the eye, to be able to connect with them, to understand the psychological mechanisms. I think that that's much more scarce, and that people that have that are going to be advantaged. Yeah,
I mean, it's interesting because this is, first of all, one quick thought jumped in my mind, which is you're a few years younger than I am.
Much younger.
Shorter too, but you're...
And grayer.
You're very happy when your doctor's putting his hand on your shoulder. In a couple of years, you'll know where else he's putting it. This dynamic of whether college is a good idea or a bad idea, right? You and I have had many discussions around these. I think part of the problem is the lack of price signals, that there is no differentiation between an art history major and an electrical engineer in terms of the financing costs, the cost of tuition, et cetera. It's just a fundamental breakdown in the system that ultimately should be ameliorated in at least one way or another. On the flip side of it, I actually kind of take the opposite direction that you're highlighting in terms of the blue collar workers, because the very simple reality is it's a threshold component. And it's actually very, very easy. This is part of what we're actually seeing on YouTube today, is that young people facing a shortage of electricians or plumbers are turning to YouTube. And if you have a college degree and you actually are willing to put honest effort into it, it takes you about 6 hours to learn how to do most plumbing jobs. It takes you about 6 hours to learn how to do most of the wiring and electricity in your home. So these are not jobs that are actually very difficult to replace, and ultimately some robot is going to roll onto stage that's been programmed in the environment and solve that.
Much harder to be a PhD biotech researcher.
Correct. I ultimately very strongly emphasize trucking as a really good example, right?
Yeah.
3 years ago, 4 years ago, all anybody wanted to talk about was trucking shortages and how we had failed to invest, and that there was going to be shortages of trucking and we're going to be dealing with this for years, and now we have the worst trucking environment basically in history. Yep. Merely from a roughly 20% expansion of capacity. It is very much; these are very much industries in which if there are one extra plumber in a community, everybody suffers who follows through on that, because it
very interesting.
Is very.
I do think nursing will probably be a little bit more protected, just given demographics and demand.
I have to be honest. That's not one I've spent a lot of time thinking about, but. My hunch is that is also very, very much at risk.
YouTubeable, yeah.
Well, YouTube is probably not the right analogy there, but once the robots are capable of fixing my toilet, I'm pretty sure that they will be able to fix me. Super, super interesting, Josh. We've got 3 minutes left. I'm going to open it up for a few questions from the audience. Anyone want to ask a question?
Can I ask anything?
Raise a hand. There we go. There's one.
Complexity. Well, what's going to happen down the road? Are they going to merge? Only one going to come up and be the winner?
So I have to repeat the question so those online hear it. Just very quickly, the question is effectively, if you are skeptical about the current crop of companies, what do you see as likely to happen to these particular crop of companies?
I think OpenAI has, for now, become the runaway success on the consumer basis. I think it was number one in the store. And I was actually saying some time ago, and it ended up proving a little bit prescient, that Google was the dark horse to watch. Google, it was a year and a half ago, had the laughing stock of the models, which was Bard. And today, Gemini is like number one. So I would really not count Google out in this. And remember what Google effectively did to Microsoft, which is they created the entire Office suite and gave it away for free with an advertising model for search that subsidized everything. And I could see them dropping prices so far low that it really undermines many of the people that are charging $20 a month for things. And you will start to not really be able to distinguish, from the image generation, which I think they have the number one right now, something they called Nano Banana, but now they call like Imagen 4 or something. It's really remarkable. Their context window, meaning how much data you can put in, was the largest. Maybe Elon now with Grok 4 Fast has a larger window. So we will, as consumers, continue to benefit from this, but it will be a race to the bottom on pricing. And it goes back to what Mike was saying before about the margins and the economics. If I had to speculate, OpenAI has 3 challenges. They've got to get through the conversion, from a nonprofit to a for-profit. They'll figure that out. They've got to get the Microsoft dynamic and ownership, settled. I thought that they were going to be screwed when Elon and Trump were super close because Elon hates Sam. But now that they sort of had a falling out, although Elon and him were like shaking hands at the Charlie Kirk funeral, who knows? But I thought that they were going to turn the turrets of government on OpenAI. So I think OpenAI, $500 billion valuation now, could be $1 trillion. We will continue to benefit as consumers. Anthropic has taken a slightly different tack, and they were the number one player in coding until OpenAI came out with Codex, and now they're the sort of number one amongst the consumers. We have a company, Cognition, that I think is the number one. If you haven't seen Scott Wu, you should look up this. It's absolutely incredible. We backed this guy. He's now late 20s or 30. But when he was 12 years old, he won the Math Olympiad. And you can see this online. There's like a 1-minute clip before the questions. And like, I can't even read it, and he's like answering sophisticated math problems. Just absolute genius. So yeah, Google, I think, ends up emerging as a winner. Apple right now is really counted out, and I actually think that they're going to end up winning as well, not because they developed their own models. Meta has been
Just very quickly, I mean, if your hypothesis on device is correct.
Yeah, exactly right. And they publish these papers, and some people are like, oh, they're publishing the papers because it's sour grapes, but I actually think that they're technologically astute about what they're saying in the directional arrow of progress. Meta, I've called this Pochapalooza because you had Zuck beginning 3-4 months ago basically go crazy with $100 million pay package, $100 million pay package, and they're buying up dozens of businesses like people don't even know about, but they're doing the dance with the DOJ, FTC, where instead of buying the business outright, they buy 49% of it, license the technology, acqui-hire the people. It's really shady how they're doing it, and I think it should stop because it's breaking the social contract between venture investors and founders, but it's part of their sort of arbitrage around the DOJ and FTC. They're licensing for images. They're doing Mid-Journey. We'll figure out who ends up the search winner on this in the same way Google was getting, I think they were paying Apple $20 billion a year to be able to have the search bar, in Safari. You'll see the same sort of thing with on-device AI. Amazon has really just sucked with this, unfortunately, and I love Amazon and I love Jeff Bezos and I love the team, but they've got to get Alexa right because it's just like a vestige and it's almost like a joke. But so was Bard, and then it came. So pretty optimistic that that we as consumers are going to continue to benefit no matter what.
All right. Well, we have to wrap it up.
Thank you.
Thank you so much, Josh.